Good day, I'm Mrs. Brimacombe and we are going to look at adjustment where we're now going to focus on bad debt and bad debt recovered. Some revision before we go on to the activity. Bad debts is debtors with outstanding debt. We've tried everything to collect that money and eventually we got to the point where we decide to write it off as bad debts. So it means they will no longer be a debtor. This is an operating expense. And when we decide to write it off as bad debts, we are going to remove them from our debtors control. The GAR principle being applied here is prudent. We are being conservative. So on the accounting equation, to show this, bad debts is an expense, like mentioned before. So if expense is debited, it means our owner's equity account will decrease. As soon as our expenses increase, our owner's equity decrease. Debtors control is going to be credited. They are being removed from our debtors, so our assets will minus. Now, it could happen that eventually that debtor does appear and they want to settle their account. But now we've removed them from our debtors. So we cannot say, but we've received money from a debtor. And this is a common mistake, which we're going to look at later on if the bookkeeper made a mistake. Because they're no longer a debtor, we are going to say this is bad debt recovered. And bad debt recovered is an income. Do not credit your bad debts if a debtor makes a payment, a debtor whose account was written off. I need to know what was my percentage bad debts, and of that, what was the amount that we've recovered. Bad debts recovered, because it's an income, it will increase our owner's equity. Account debited is bank. Now, very important. If bank has a favorable bank balance, it means our current assets will increase and that will appear in the cash and cash equivalents. If our bank has an unfavorable bank balance, a bank overdraft, then it means that our liabilities will decrease and that will appear in the current liabilities. Looking at activity 10, show the effect on the accounting equation and indicate how it will appear in your financial statements. A debtor, Matthew, was declared insolvent, received and recorded 1,440 as the first and final dividend of 60 cents in the rand. The balance must be written off. So this is the type of adjustment which you can expect grade 12 level. Because you've done this since grade 10, where they provide you with the amount that you've received. So I now need to find out what is the amount that will be written off. Also take note, we've already recorded the amount received. What is left for us to do is to write or record the balance that must be written off. So if I look at this now, the total debt equals 100 cents. He paid 60 cents for every 1 rand or 100 cents which is outstanding, and that amounted to 1,440. So to find out the bad debts that must be written off, we're going to take 1,440 times 40 divided by 60 cents. And that equals 960. The total debt, it's not required. It's just to show you how I would calculate the total debt. I can take 1,440 times 100 divided by 60. Or once you've calculated the bad debt, you can add it to the 1,440 and it will provide you with exactly the same answer. To write off the bad debts, we need to open up debtors control and bad debts. Debtors control is going to be credited with 960 and bad debts is going to be debited. Always remember, we're starting with the balances and the totals brought forward, because we need to find out what is the final amounts that will appear in my income statement or balance sheet. The effect on the accounting equation: assets minus 960, owner's equity minus 960. Adjustment B: a debtor owing 5,200 whose account was previously written off as bad debts paid the amount due. No entries were made. This means I need to show bad debts recovered. It will be credited. We've received money, 5,200. Bank will be debited with 5,200. Effect on the accounting equation: plus assets 5,200, owner's equity plus 5,200. To show the amounts in our financial statements, my new balance for debtors control will appear in trade and other receivables, 74,040. A reminder: do not show the amount which the debtor Matthew paid. This has been recorded, so you only need to show the bad debts. Bad debts is closed off to the profit and loss account, so our expense for this year, which will appear in your operating expenses in your income statement, 1,460. Bad debts recovered is an income. It's closed off to the profit and loss account. Our total income, 5,200. Bank, my new balance is 40,200. Because this is a favorable bank balance, it will appear in your cash and cash equivalents, 40,200. Thank you very much. I want to leave you with this quote: there's no substitute for hard work. In our next activity, we are going to look at adjustments, provision for bad debts. Hope you have a wonderful day.